All right, the headline, top CEOs flocking to Trump again in bid to shape agenda. That's from the Wall Street Journal. Joining us now to talk about it, Mike Faulkender, Chief Economist at AFPI, former Treasury Assistant for Economic Policy, Scott Hodge, President Emeritus of the Tax Foundation. Scott Hodge, I want to start with you. You know, this biggest issue for these CEOs of the Business Roundtable, I mean, I was there, I was questioning Mr. Trump. The single biggest issue was the tax policy. Okay, now, the Bidens are trying to throw cold water on this. But from the standpoint of just sheer competitiveness, which I thought was an important thing years ago, right now, at a 21% rate, plus state and local, what do you tack on? Another 4%. That's 25%. I think that's about midway in the OECD big countries. You jack that up to 28%, plus 4 is 32%, and we'll get into some of the other tax hikes that Biden wants surrounding it. This will make our companies uncompetitive. And I think that's why these CEOs wanted to hear from President Trump that he wanted to keep 21 or go to 20 or even go lower. But his message was, I'm not going to raise it. If anything, I'd like to cut the corporate tax. I mean, isn't that the bottom line here? Competitiveness?
Absolutely, Larry. In fact, you know, I think right off the bat we need to dispel this sort of progressive propaganda or mythology about the U.S. having a low corporate tax rate. By global standards, we do not have a low corporate tax rate. Our 21% federal corporate tax rate is still higher than Sweden's. And when you add in the state rate, it gets up to about 25 or 26%, which is equal to France, and still higher than China's 25% rate. So we are distinctly in the middle, and it's hard to say that somehow this is a race to the bottom. In fact, and as you know, we've talked about this before, the corporate tax rate is the most harmful tax for economic growth. And when you look at the long-term effects, workers bear the heaviest burden of the corporate tax with lower wages, especially those at the margin, like women, younger workers and low-skilled workers. And so for Mr. Biden to go out and say, I'm going to raise the corporate tax rate to 28%, he's guaranteeing the U.S. to have worse competitiveness, to kill jobs, and to undermine U.S. innovation. That is hardly a campaign pledge to run on.
You know, Mike Faulkender, when you go through all the Biden proposals, I mean, they want to raise the corporate tax. They want to raise the individual tax, which goes into calculating the corporate tax. They want to raise the tax on dividends, which is the same as capital gains. That goes up, too. And the Obamacare investment tax. So when you put all that in there, they're actually raising it by about a third. They're raising the tax burden by about 1/3, Mike Faulkender. And I don't think that kind of analysis has seen the light of day properly. A third higher tax, all in, with all of their little mini tax hikes.
That's right, Larry, because not only do they want to do the things you just mentioned, but they're also looking to raise the share repurchase tax.
Right.
They're looking to implement a tax on unrealized capital gains. And so if you think about all of that activity, they're assuming that that's going to have no impact on what companies do. But as Scott just said, the bulk of the burden actually flows through to consumers and workers. And so you would see reductions in employment, you would see lower wages, you would see higher prices on top of the inflation we've already had, because it's not as if corporations are just going to have shareholders bear all of this. It's going to impact their operations. And so all of the reason that these CEOs are looking to get behind President Trump is because they realize that in order to serve the American people, they need a low regulatory environment and they need a tax burden that's competitive with the rest of the world, rather than being demonized and told they don't pay their fair share when in fact they do.
Well, I think Mr. Trump won over, frankly, a lot of minds at that Business Roundtable for his stance. Yes, both tax cutting and also he will prevent over-regulation, and he will opt back into a better permitting process for drill, baby, drill, but for any other construction as well. Scott Hodge, the other thing is Ms. Lael Brainerd, who has the NEC job right now in the Biden White House, she was quoted in the paper today saying that the corporate tax share is low and corporate profits are record highs. Any way you look at it, we're not raising enough. Now, we went back, I don't know, maybe we're wrong here, but after the Trump tax cut, so the corporate share of the corporate revenue share of total tax revenues was running about 4%, slightly higher, 2018, 2019, pre-pandemic. Now that thing is up to 6.5% of revenues. So it's actually gone up. So I don't understand what Ms. Brainerd is saying. The tax collection burden is rising, not falling. What's she talking about?
She should know better. And this is just simply economic malpractice, and it's just propaganda. In fact, it looks like corporate tax revenues are going to hit an all-time high, at least not adjusting for inflation, but well over $550 billion in corporate tax revenues this year. And yes, corporations are making good profits, but they're also paying their taxes. And that is in contrast to what we're hearing from the White House. And they're simply trying to make a demon out of U.S. corporations who are trying to compete globally against some very stiff competition. And the worst thing is that this administration has been trying to get the U.S. involved in this global tax cabal or in this global minimum tax and sell out U.S. corporations so that they have to pay more taxes abroad and in the U.S.
Yeah, we're going to let France and the EU determine our tax burdens for American companies, which is not a cool idea. Even Faulkender is against that. You know, Faulkender, the individual tax revenues as a share of total revenues, I think, are up to about 46% or something like that. It's a very big number. The point is, how about this for a different point? Instead of we're taxed too little, how about we spend too much? You agree with that point, Faulkender? You think we could curb spending instead of jacking up taxes? What do you think? I'm going to give you the last word. It's such a tricky question.
Absolutely, Larry. Look, if you look at the spending forecasts, CBO has the federal government spending 23 to 24% of GDP as far as the eye can see for the next 10-ish or so years. If you go back to prior to the pandemic, it was at 20%. So the federal government is still operating as if there's a pandemic emergency out there, spending way beyond its means. There's so much more capability for us to cut spending rather than thinking that higher tax rates and less economic activity is the solution.
All right, we'll do more on spending maybe tomorrow night. Michael Faulkender, thank you. Scott Hodge, terrific stuff, gentlemen.